If you're watching this video, you're probably a trader or you're thinking of coming into the Forex trading market and you want to make some money. Today, we're going to discuss 7 things that you should know as a beginner trader. Hi everyone, my name is Barbara. You can call me the girl who trades. Today, we are talking about 7 things you should know as a beginner Forex trader. Number 1 is that you should invest in knowledge. It's very important in any venture at all to be well read, educated on the venture before you enter it. Being that Forex trading carries a bit of risk, you should have correct and credible information before you enter the market. Get a good mentor. Find a mentor that resonates with you. You can always do your reviews. There are lots of trading academies and courses around. Do your research, find out about them, and then choose what resonates with you, what fits your trading plan and style, and then you go with them. It's very important to have a good education and basis before you get on the market, because it can get a little tricky, and having someone to run things by, it always helps. Personally, I've learned a lot from Kojo Forex. I've learned a lot from Aram Della, and I just want you to find who fits your trading style, find who fits your what you want, and then you go with them. Let them teach you. Let them also give you some insights on the market. It's very, very important. The second thing is that you should have a trading plan. One thing I've noticed is that when I was starting out, I would have one plan one day, and then I would see someone doing this, and then I would like, hey, I want to try that one as well. And then you see another person doing that, like, oh, I want to try that. When you do that, you keep wavering and you don't make a profit. Honestly, you won't be a consistently profitable trader if you keep wavering like that. You have to have a plan and then stick with it. What happens is that you see another person using this indicator, it gets on your chart. You see another person using that indicator, it gets on your chart. It crowds your chart. You don't even know what you're looking for anymore. So it's important that you have a plan, stick with the plan, and then develop the plan so that you can become profitable with your plan. But don't waver because you see someone doing that, you see another person doing that. The third thing is that you should follow your own rules. That's very, very important. Trust me, no trading strategy is better than another. So far as you're making money consistently, that's it. You shouldn't be looking at what other people are doing. Forex trading can get a little funny, especially retail trading, with Instagram being flooded with so many traders. You see someone saying they're catching 100 pips, another person's catching 200 pips, someone is catching 30 pips, and they're making money. That's the most important thing. I personally had, at some point, I just wanted to catch 30 pips on any trade I take, just 30 pips. And I was consistently making a lot of money doing that. But then I started seeing people catching 100 pips on the same moves that I picked. So I'm like, oh, then maybe if I stayed in the market longer, I'd have made more money. And as soon as I deviated from the plan I had, I blew my account. So it's very important that you stick with your plan. You stick with your plan and you develop your plan. Stick with your rules. Follow your own rules. It's very, very important. Stick with it. So far as it's making you money consistently, it doesn't matter that you're catching 100 pips or 300 pips or 20 pips. So far as that is making you money, stick with it. The next thing is that you should study the charts. Study the chart. No matter how much information or knowledge someone imparts to you, if you don't put it into practice, it's not going to be very useful to you. Study the charts. Spend time behind the charts. I remember some time back, one of the people I follow and respect so much in the market said you should spend 12 hours a day on the charts. And really, it makes sense. You have to spend time, you have to be invested on the market. You have to spend time on the charts and know how the charts react to different times, different trading sessions. All that is very important. So you have to make sure you're spending time on the charts, applying your knowledge, applying your plan, and then seeing how the market reacts. So people will know that, oh, in the Asian session, this pair that I trade usually ranges, and then it usually moves a lot in the London session, in the New York session. It's very important that you know all these things, and then that is how you can become profitable when you're applying your plan. So it's very important to spend time on the chart. The next point is that you should back test. So as you're applying your knowledge on the chart, you should also go back in time. So you can go back in a month, 2 months, last year, and see how price was reacting, how your currencies were performing, and then you can apply your plan to those times and see how profitable you would have been at the time. So that also helps you calculate your win rate, because you should know how many times, if you take a trade based on your plan and your strategy, you would be profitable. Very, very, very important, because that is how you can also calculate how many trades that you would require to be consistently profitable. Believe me, forex trading, you will definitely make losses. I know you've heard this before, but it is true. You will make losses, and so you should know how many, with following your plan, how often your plan would make you win and how often it would make you lose. So that's very important. Another very important rule is to treat forex trading as a business and not as a get-rich-quick scheme. So I keep saying that forex is my full-time side hustle. The same way that you treat any side hustle as a business is how you should treat forex trading. It's very important. So you have to manage your risk, and not, if you were selling something, you wouldn't expect to make 300% profit in a week. So that's the same mentality you should come to the forex trading markets with. You should be careful how you're trading. At most, beginners are advised to risk 1 to 2% per trade. This is so that you give yourself some room and not panic anytime your trade is in a bit of a drawdown. And this way, you can also develop yourself, learn how to manage your emotions on the market. Even if you lose, you're only losing 1 or 2% of your account. Now, if you're risking 20% of your account on one trade, that means in 5 consecutive losses, your account is dead, blown. And that is what you don't want. And think about it. If you're consistently risking 1% or 2%, consistently building yourself up, in a year or two, think about where you would be. Rather than risking 20% today because you want to flip accounts as a beginner, and then in a week or two your account is dead. It's not worth it. So it's important to start small, build yourself up, get the correct knowledge, and when you do, you can now start flipping accounts and then doing wonderful things on the market. So it's very, very important to treat forex trading as a viable business. Treat it as a business. Take your time, learn, practice good risk management, and then make sure that you are building yourself up slowly over time, and you will make it. So the last thing I'm going to talk about is that you should look at the news. So whether you're a technical trader, like a full-time technical trader, or you a fundamental trader, that is, you trade the news, it's still important that you keep an eye on the news. It's very important. Well, people say that the news will always confirm your technical analysis. Well, it may be true, it may not be true, but then the only thing is that you should know, because the news can create some crazy volatility in the market. I personally use forexfactory.com. So in forexfactory.com, you realize the high impact news is always in red. I'll link it in here somewhere so that you see it's always in red. And when you see that and that currency that is in red is, yeah, trading any of that, you should keep an eye out for how it's going to make the market react. I will put a snippet of an example of what gold did this week in this video so that you see what I'm talking about when it comes to manipulations by news when you're trading. Hi guys, so I've just used the replay tool to bring this chart to 10:15 on the 13th of July, and I'm just going to show you what the news caused. So on the 15-minute time frame, you realize that gold was making some pretty much higher highs and higher lows, and then about 1812, it's kind of ranging between 1812 and 1806. Now when I play this, so the news came in at 12:30. Okay, so this candle right here is the 10:30 candle. So we have the 10:45, 11. Okay, so we're just going to stop that right here. So this is the 11:15 candle. I'm just going to play that quickly. There we go. This candle is the 11:45. So next candle. So this next candle, that was a 12 o'clock candle before the news hit. So it also taps into this zone, which has the 1812 area. And in the past, around 9th July, you realize that it also served as a resistance point. So 13th, we have that, and it taps into this zone with that candle at 12 o'clock. Let's see what the next candle would do. There we go. Boom. So we see how much manipulation this news was going to cause. So at 12 o'clock, we had this bullish candle, very strong bullish candle. At 12:15, another very strong bullish candle. And then at 12:30, when the news hit, you realize we went up to about 1816 and then way down to 1803. The next candle also closed very bearish, to dropped price to about 1798. And then so you see the manipulations that happen on the markets because of the news. So if you were in this trade bullish, maybe your target was 1820, you would have gone up and then brought way down here. You probably would have exited the trade, and then boom, it goes back up. So that's what happens when you don't pay attention to the news when you're trading. It may not change the overall bias of the chart, but it can wake you out. So if your stop loss, for instance, was even way down here, if you were in buys, even if it was at 1805, you would have been taken out of the trade. So that the manipulation sometimes caused by the market, it's very important, by the news, sorry. It's important that you keep an eye on the news when you are trading. Okay guys, I hope you've learned something new today. Please let me know in the comment section if there's something you want me to talk about, a video you want me to make, and I will get on to that. Thank you so much for watching. I'll see you in the next video. So till next time, it's the girl who trades.